All right. Welcome everyone to our Black Swan Elite Financial Consultant Super Saturday conference. Every Saturday we have 10 o'clock a.m. Pacific time on the West Coast. Okay. And my name is Andrew Wong. I'm one of the executive leaders here in Elite Financial Consulting Group. So, for those of you joining us for the first time, uh, get ready because you are about to discover more ways to save money, protect your wealth, and build financial securities than you may have ever seen before. Okay, trust me on this. So, some of this information may feel overwhelming, or what about we share on our platform? That's okay. So you don't need to you know master everything today. But what's important is knowing these powerful solutions exist so that you now have specialists who know exactly how to help you to use them. Just like I just spoke to one of the ER3 plan and FICA tip tax specialists, Sheldon Singleton. Okay. So by all means, think of us as like a Costco or Walmart. So when you walk in, what happened? There's a greeter and go guide you and help you to find what you need. That's exactly what we do in financial solution. Okay, so we provide a complete financial solution center tailored to exactly what our client needs and wants. So here's the best part. Okay, we are not here to sell you anything. So you can put your checkbook away, or those of you skeptical, oh no, I'm gonna get into one of these deals that cost me money and lose money, all kind of stuff. No, we are here to help you what make money by saving money. Okay, that's all there is to it. So there has never been more exciting time. I mean, be in business for me, it's just tremendous. It's just technology and all the things. But when sometimes it come to, difficulty, turn on the Zoom and link and all that stuff. But to me, is making money is never been so easier than before. So enjoy and learn. Oh, learn fast and take your notebook out. And most importantly, refer the solution and let our specialists to do all the work for you, and you get paid just like a regular consultant. Okay. All right. So that being said, let's get started. Oh, before I forget, disclaimer. There's always, they're saying these are for just for our training purposes. Our presentation elite, Black Swan Elite consulting firm. So if anything come up with tax and blah blah blah, talk to your uh, tax person. All right. So um, b- today we start off with sharing with you the most powerful to me is the car insurance saving program. Um, it just blown me away because why? Because it worked for my case. Uh, I saved. I came on when I heard about this program. Believe it or not, I did 6 months um, doing research, look into it. Just like anybody else, we all want to know: is it work? Is it legit? Is it all that stuff? And then, and then when I just get on because it makes sense. So uh, after a few weeks, I go, wow, this is crazy. I've actually saved money on car insurance, and then I add on my other three cars in. Okay, so just finish up my 6 months. So how car insurance they go by 6 months contract kind of thing. So for all my cars, approximately a bit close to 1,500. It's awesome. So to some of you, 1,600, nothing. Doesn't mean anything. That's fine. But to me, that's a good, funding to one of my kids, IUL program, right? Saving program. So that being said, let me go in and share. First, I um, will introduce you Griffin Addy. He made a brief 7 minutes, straight to the point presentation about good driver mutuality, and then I'll come back and share with you the opportunity of it, how you make money on this program. Okay, so let me pull this up, and here's Griffin Eddy.
Started Good Driver Mutuality to help good drivers save money with our collision and comprehensive alternative. If you're a driver, you've probably noticed that car insurance is getting more and more expensive every single year. In 2024 alone, premiums jumped an average of 24%, and in California, they're expected to surge by a staggering 54% in 2025. For many people, auto insurance is now eating up around 8 to 10% of their annual income. The craziest part is, when you look into the actual facts, you see that 94% of people never even file a single collision and comprehensive claim each year. It's no surprise that most people feel completely trapped in a system where they feel forced to pay more and more money each year on something that they rarely actually use. That in its core is why we created Good Driver Mutuality, to give responsible drivers a smarter, fairer way to protect themselves while still saving money. Good Driver Mutuality, or GDM, is a cutting-edge tech company based in Silicon Valley and backed by the legendary venture capital firms like Ribbit Capital and Heda Sophia. These are the same investors behind massive successes like Spotify, Robinhood, Credit Karma, and even Uber. Before we get too far into GDM's unique saving mechanisms, let's go over the very basics of auto insurance. Full coverage auto insurance is largely made up of 3 parts. First, you have the liability. Liability is the legally mandated part that you must have to drive a car. This is the part that covers costs of damage or injuries you cause to others in an accident. Then there's the collision and the comprehensive portion. This is optional if you fully own your car outright, and it covers damage to your own car, whether it's from an accident or something else like hail, a theft, a hit and run, or even vandalism. It's important to remember that GDM is not an alternative to liability insurance, and all of our members must keep their legally mandated liability insurance, and if they own their car outright and choose to, they can directly drop their collision and comprehensive from their traditional automotive insurance company and join GDM as their alternative to collision and comprehensive. GDM is not an insurance product, but operates more similarly to mutual aid, where members come together to support one another and save money by sharing the cost of unexpected accidents together. Now, let's go over the unique mechanisms that allow you to save with GDM. So let's say you're paying $1,000 every 6 months for collision and comprehensive coverage through your traditional insurance company. If you don't have any accidents during this time, whether you paid monthly or all up front, you still end up spending the full $1,000 quote amount on something you never actually used. It's not like you can call your insurance company and ask for some money back. If you tried that, they're probably just going to laugh at you. Well, with GDM, we work completely differently from traditional insurance. When you get a quote from us, it'll be similar to what you were paying for your collision and comprehensive coverage with your traditional provider, but we have some incredible mechanisms that allow you to save. First, we break your quote into 2 parts. You pay just 20% of your quote up front as a service fee, and the remaining 80% is known as your pledge amount. Your pledge amount is only used when there are actual accidental costs within the community. Everything you didn't share during your weekly sharing becomes your savings. Here's how weekly sharing works in a bit more detail. Each week, we total all the accidents across the entire community. Then every single member shares a small pro rata portion of their pledge amount to help cover those costs. Naturally, based on the type of accident that occurs, the sharing amount will vary from week to week. Some weeks you might share a bit more, some weeks a bit less. By the end of a member's 6-month, 25-week plan, they paid the 20% service fee up front, and on average, they've shared around 30 to 40% of their original quote through weekly sharing contributions. That means many members complete their 6-month plan only actually paying around 60% of their quote, with some members being able to save up to 40% off their original quote. Let's look at a real member who was able to save even more than 40%. Member A joined in September 2024 and received a quote of $1,036. They paid their 20% service fee, which was $207, and their 80% pledge amount was $829. Over the course of their 6-month or 25-week plan, they shared a little bit each week, totaling just $162. That means they were actually able to save $663 or over 64% off their original quote. Because GDM operates with a community-first approach, we prioritize full transparency. What that means is each week we show all members the actual accidents that have occurred, complete with photos, repair details, and even shop invoices. All of this is right in the app. So when you are asked to share, you'll know exactly where your money is going. The second savings mechanism and way GDM can help protect its entire community is through positive selection. Simply put, we aim to only welcome responsible drivers who rarely have accidents. To do this, we've set a few key eligibility rules to join. Cars with an MSRP over $100,000 aren't allowed. Drivers who exceed 30,000 miles per year can't join, and we don't accept any commercial vehicles such as work trucks or rideshare cars. Those guidelines help keep our accident rate low so the entire community has the opportunity to save even more. Our third savings mechanism helps everyone save on accidental repair costs. We've partnered with Innovation Auto Group and Service Up to give our members access to over 5,000 licensed and vetted repair shops nationwide. So when something does happen, you simply report it through the app and one of our mutuality advisors will call you. They'll help to arrange a tow truck if you need one and direct you to the nearest in-network repair shop. The best part is, these shops are fully licensed and vetted, ensuring you receive top quality service. And because we secured discounted group rates on repairs, the entire community is able to benefit from lower repair costs, which means lower sharing costs. Many members who've gotten into an accident have shared their glowing reviews about their experience with GDM. If you like what you hear, getting a quote is super easy. All you need is your declarations page, your driver's license, and a referral code since we're a referral-only program. Then, you just need to download the Good Driver Mutuality app from the Apple App Store or the Google Play Store, and you can get a quote in under 5 minutes. We appreciate you taking the time to learn about GDM, and we're excited to welcome you to Good Driver Mutuality.
Awesome. All right. So you just heard Griffin share with us the program. So now I'm excited to bring you one of our business development and my partner and my party partner as well.
Party partner and friend. That's right.
Hey, in life we gotta enjoy life, right? Right?
Oh man, if you're not enjoying life, you're doing it wrong.
Exactly. We work hard, we play hard, right?
That is
So,
right.
yep. So thank you for the opportunity and thank you for your time to jumping on. I know you're very, very busy. Everyone wants you on every single podcast and on and on. So like I always say, I say one of these days when I grow up, I want to be like you, Brigham.
Oh, no way. I've been
Oh, and
chasing you this whole
director.
time. I want to be like you. I don't know how you do it. You are so talented. You are in so many things and you make them all work. I feel like if I try to focus on more than two things at a time, my life falls apart.
I
So I gotta
appreciate
be hyper focused on, on what I do. I feel like I'm good when I have hyper focus, but
it.
one day I want to be like you and be able to just handle multiple things at once. I think that's amazing.
Yeah, yeah. So, yeah, one of these. So, share with us how we make money on this. Okay.
Okay.
Uh, so,
Let me go ahead and pull my I'll pull my slides up. And yeah, I
yeah.
apologize for being a little late, but I was at another presentation with people in 7 different states. Everybody wants GDM. Everybody sees the need, and everybody's able to see just the value that we're bringing to people.
Mhm.
Catching on that it's either them or somebody else is going to grab that
Exactly.
market share.
Exactly. You know, Uber, and Airbnb. So everything is just turn on the technology nowadays, and it just
Yeah.
crazy. So, yeah. So share with
Andrew,
us how the reward program works. First off, like, do we need a license to do this?
You
Yeah.
don't need a license to do this. We're
All right.
not an insurance company. We're a fintech company.
Okay. All right.
how much of the market is taken at this point? How
About
many
zero
percent?
point about 0.0001%.
Zero.
Awesome.
Yep.
For
Hi,
Donna is
Donna.
0.00000000 because we how much the market in term of money
So the market is just for auto collision and comprehensive insurance
just alone.
is $170 billion.
Donna,
Uber,
if you just get like a fraction of 0.0000, you'll be fine. Okay, in
oh
this
yeah,
industry.
I think I
yeah,
am. The cat would be happy. Yep.
yeah. It is such a tremendous from just a market size, and this is the best part of it all, guys. Uh, Collision and comprehensive is $170 billion. When we get
Wow.
into auto liability, commercial vehicles, maybe even housing insurance, that's another $400 billion, right?
Housing as well. Wow.
Well,
Yeah,
When is
and
this plan, when is it planning on going international? Do you know, or you just kind of playing it by ear right now?
yeah, we just
yeah.
kind of listening to the markets. We want to go into Canada ASAP, but yeah, we need to just kind of establish a home base. Once
Yeah.
we do, we're gonna go to Canada. We're gonna go south of the borders. Mexico, Central South America. We're gonna take this into Europe, into Asia. It's gonna be a global company. So the wonderful
Great.
thing about being a fintech that is people, right? The people make up this base. That's why Uber was able to go global so quickly. Is because hey, as long as there's people down on the ground, willing to participate, there's business, right? There's a market. And the wonderful thing about this is that the more we grow, the more members we have amongst the community, it just makes us stronger. It makes us more solid. Like, the community cooperates. You don't never have to decide or don't have to depend on one company to choose what happens. Right now, if you get into an accident, as much as you think your insurance company is there for you, I guarantee you the one goal that they have is to pay you as little as possible.
That's right.
So where's the safety in that, right? And if they don't pay enough, we have two options: deal with it or take them to court. And who wants to go through that? With us, because it is a community-based approach, we just ask that everybody is honest and upfront. If you have an accident, report it like a regular accident. If your car doesn't qualify, don't join. It's just really, really simple. And as long as you do, we have zero motivation for not honoring a claim because our money doesn't come from claims paid or claims denied. We take our share at the beginning, like you saw in the video. We take our share at the beginning of the plan, 20%. That's it, right? And you renew again, 20%. That's our operations cost right there. When people actually pay towards accidents, 100% of that goes towards the repairs. The other day I woke up and I thought, because my insurance renewed, right? And I noticed that my liability went up again. And I thought, man, I don't even drive. Like I work from home, when I work from home when I'm in Utah, and the rest of the time I'm in Palo Alto. I'm not driving my car, like not even 3,000 miles a year. My liability went up. And I thought, it's fine, but I really wouldn't care if my insurance went up, but I know that it was going towards helping people. But I don't know. Like for all I know, they're keeping all that money, right? Like I don't know how they're using it. With Good Driver, I have that peace of mind that if tomorrow, or next Monday, I should say, right? Next Monday, I have to share $5. I know that it goes towards the people that need it. It doesn't go towards the company's pocket. And you just can't say that very often about many companies anymore.
Yep, like I remember when I heard about the program, and I already tell everybody many times, told this story many times that I'm a very very conservative guy. I have to take a look on everything, and then it cost me 6 months, and that was the time that I look at it just like maybe hovering between like 2,000 car or so, and then when I finally say, wow, every way I check, it just you know awesome, and then good positive feedback, and the have a venture capital backup and all that stuff. And then when I heard about stock option, it blew my mind. I said, this is it. I mean, I missed too many opportunity in our lifetime. I guess some of you will got experience that. I said this time I'm not gonna be, you know, so I try in one car. So then when I came on to now, we over close to 7,000 cars. So over six. I'm just like, okay. The question is how many cars, as a businessman, I say how many cars gonna be enrolled under our team, you know, right? So, and another word, Donna, how many car will be under, how big the market you capture under your team? That's the name of the game right now. What if we go to Canada, Mexico, and the rest of the world? So that's what technology, you know, does. So anyway,
That's
so
right.
all right, so I'm excited. Show me the money.
All right, let's do it. I'll be very, very efficient over here. Yeah, just I want to be respectful of everybody's time, but this is just so exciting, making money by helping people spend less. I don't know how we know how much easier any sale can get, except for saving people money. Now I realize that this isn't for it isn't for everyone, right? There's certain cars that don't qualify. There's certain drivers that won't qualify, but the market is still just incredibly, incredibly big. How do you make money with Good Driver? Number one, let us save you money. Okay, just become a member. Let us save you money. As soon as you become a part of the community, you are eligible to receive referrals for or referral commissions for anybody that you help join. So if you just have a customer, right? You have no interest in the business. If somebody joins because you referred them to us, we'll give you a 10% commission on the quote that they receive when they join. So if somebody's quote is $1,000, it doesn't matter how much they paid to register, how much they ended up paying. Like right now, people are saving about 50%. That's our average right now is 50% of their quote. It doesn't matter. You're gonna get paid 10% on that initial quote. So somebody pay, is $1,000. Even if they only up paying 100, you still get paid. Sorry, 500. You still get paid $100. Once you refer 8 vehicles, you have the option to become a full affiliate. Okay, and now you can start building teams and earning override commissions, which is what this is. I know this looks like network marketing, but it isn't. And trust me, I have no issues. I love network marketing. All right. Like it's fed my family for 21 years now. I love it. It's just that this is not what it is. This is all based on initial sales. That's why it's an override commission system. Yes, it is multi-level, right? But it is override on initial sales. So once you become an L1 by bringing in 8 cars, you start getting paid on any referrals that your personally refer people make, whether you want to or not. You're gonna get that money. I'm sorry. Okay, I apologize ahead of time. Now, if you continue to bring cars in, right, you accumulate 20 cars, however long it takes you, doesn't really matter. There's no monthly quotas, there's no special requirements, just accumulate vehicles. Once you get to 20 cars, okay, you also achieve the rank of L2 and qualify for overrides on the referrals that your personally refer people make. Again, they don't have to be affiliates. They're just customers, right? One off, one here and there. You still get paid on that. And obviously your friends will get paid. As you accumulate more cars, 50 cars, 125 cars, you go up in ranks. You start accumulating more and more levels of depth in commissions, right? So this is why when I look at this plan again, I'm not really worried about the people and your affiliates and this. Just go and tell as many people as you can. Get 50, 100 personal referrals, because eventually, I promise you, when they see the savings, they will tell everybody, and they will become sources of referral for you and sources of income for you. It's going to be like having a million hooks into a big old lake. Somebody at some point is going to be catching a fish, right? And then it's going to be a fish a day, and then multiple fish a day, right? And then multiple fish in the morning. It's just going to be amazing, just absolutely incredible. Now, you get to the rank of L9, right? 12,000 cars in your team, and that's what Andrew mentioned. You get 20,000 stock options when we go public in 2028. So time does matter. But this is something, guys, I've worked with a lot of companies. I've worked with a lot of amazing compensation plans and products. I've never had a clearer path to a millionaire like we do here in Good Driver Mutuality. Okay, because I know exactly where it's going to come from. I know at least 50 people in the next couple of years are going to do it. Right? As long as they get to L9, they're going to hit that mark. So you continue to just make referrals, right? You get commissions from new people that are coming in, and just those overrides, and you get to the rank of L5. And if you have 3 lines or 3 teams that are adding 40 vehicles each per month, you get to participate in our bonus pool program, up to 3.5% of global revenue. Remember, eventually we're going to go global. We're already in 45 states in the US, but we're going to go to Canada, just everywhere. If you do it with 3 legs, bringing 40 cars each, you get to participate in 1.5% of global revenue. If you do it with 4 legs that are adding 40 cars each, then you get to double dip, and you get to participate in pool A at 1.5% and pool B at 1%. If you do it with 5 legs, okay, 40 cars each, then it's 3.5% of global revenue. This right now, it's actually doubling people's commissions, the ones that are reaching the ranks to participate here. And for a couple of them, it's worth around $1,000 per day, not per month, per day, right? Hundreds to up to $1,000 per day right now. And we're so small, guys. Like we're barely adding like 1,000 cars per month right now. We have big goals for this year. Trust me, we want to, crush that. But imagine what happens when you're at L5 and we're bringing 1,000 cars per day. It's pretty incredible. We have a bonus here that's called the regional reward bonus. And the regional reward bonus grabs 1% of an entire state's sales, and it divides them up according to the state into different portions. And anybody that reaches the rank of L6 gets to participate in that 1%. Now, California got filled up earlier this month. So California's already taking up 1% of all the sales in California are being divided amongst 5 affiliates. So now we're developing Texas, right? And we want to develop Florida. Lots of people, lots of diversity, just amazing markets to be in, and super high rates of insurance, right? So the quotes are bigger, you save people more money, and you make more money yourself as well. So Texas and Florida. If let's say you're living in Nevada, right? But you get to the rank of L6, you can actually participate in Texas. You don't have to live there. You don't even have to have a team there. Just get to L6 and say, I want to participate in Texas. If you're the only one that's L6 in Texas, the whole 1% is yours, right? But just know that eventually you may have to share, right? So speed also matters right here, because the quicker you get there, the more time you get to participate in that all by yourself. This pays for 12 months. Just get there, right? You don't have to, there's no qualification after that. It's just get there and you start collecting this residual. Now let's talk about renewals. Remember, we're not an insurance company. We're fintech. So we pay a little bit different. When you get to the rank of L8, right? If we're gonna go just up here really quick, L8, you need 4,500 cars, right? So 1% of the first renewal of every plan in your team gets paid to you. So if that's for 4,500, 5,000, 6,000, I don't know, however many it takes you once you get to the rank of L8, then yeah, everybody that starts renewing is going to be 1% towards you. And remember that you don't stop at 4,500, right? You don't stop at 6,000. It's going to keep growing. Eventually, you get to 12,000 vehicles and you're going to be L1. And in the meantime, people have been joining your team the entire time. So you get 1% of the first renewal and also of the second renewal. Think about that. Not, and again, you need 12,000 vehicles to get there, but at some point you're going to have 20, 30, 40,000 vehicles in your team. 50,000 vehicles that maybe are just joining and they haven't renewed yet. And eventually you start going from a few renewals a day. And again, renewals based on hundreds of dollars, not 10 or 50 or 100, hundreds of dollars. Maybe it's going to be a few a day, right? Maybe a few a week, then a few a day, then dozens per day, potentially hundreds per day, right? And then potentially hundreds per in the morning. It's going to be an amazing source of residual for a lot of people. So yeah, get to L9, get to those residuals, get those 20,000 stock options. We also have a $20,000 bonus in play right now. Okay, this is going to be really, really exciting. But if you're joining just right now, you have 210 days to earn a ladder of bonuses worth up to $20,000. Okay, we have some caveats right here for those that are that fall prey to destiny, right? Sometimes you can only control what you can do, and so let me tell you how this works. It's so easy. Okay, join us. Bring 8 vehicles within 20 days of you joining, and you get a bonus of $300. Right? This will push you up to the rank of L1, and then just help 3 affiliates do the exact same thing. 3 affiliates that bring 8 vehicles each, do it within 60 days, and you get $1,200 in bonuses. This will push you up to L2, right? So then you help these guys do the same. Help them help their people get 3 who get 8 cars, right? And that pushes them to L2. Do it within 80 days. And this actually, as soon as you finish this, it'll push you to L3. Help them to get to L3. Will pay you $4,000 if you do it within 120 days. This will push you to L4, right? Help them to get to L4. And if you finish it within 210 days, we'll pay you $12,000. Now, this isn't a deal where oh, you missed here, so you missed the whole thing. No, you can miss the $1,200 bonus and still qualify for this 2,500, right? And you can miss this one and still qualify for the 4,000, right? And you earn the 4,000, you can still earn the 12,000. So it's really generous. It really is built to motivate people to get there. The best part of it all, guys, we've done it based on data. This isn't a guess game. This isn't putting the carrot in front of you with a stick so you think you can get it, but you won't. We've actually based it on data. That's why these days, 210 days. What an odd number, right? But that's because we went to the data and we've seen, okay, those that get to the rank of L4, how fast are they doing it, right? And this is the average of those that get there. So it is absolutely doable. And last but not least, our Tesla bonus for those that get to the rank of L6. If you get there and you help 3 affiliates get to the rank of L3, we'll give you a Tesla Model 3. But if you don't want the Tesla, we are happy to simply cash you out. That's about $42,000 right now that we'll send over your way, and you can use that money for whatever you want. Remodel the kitchen, add a room to your house, go on a grand vacation. You've earned it, it's yours. You should be able to use it however you want. So guys, it is an amazing opportunity, an amazing compensation plan. It is truly a once in a lifetime chance to create generational wealth in an industry that's untouched. That is, we are first to market. We have zero competition and nobody can touch what we do. No one can compare. So partner, thank you so much for the opportunity again. And I am grateful for everybody's attention to my presentation.
Awesome. And now, anyone have any questions for us? How the plan works, and those of you are licensed, like life license agents or consultant, we call it in our world. We are consultants. Um, if you have a license, whatever company you work with, or you can help your client to save a portion of their car insurance and use that money, to help them to set up maybe a term life insurance or an index universal life or whatever saving that they need. Um, it's awesome because for me, I always I just look into more ways to help people to save money, and I didn't know much about this program effect to people emotionally. When I came to some of us, maybe we only have one car that was just kind of like comprehensive and collision. Only 6 months only cost $300, you know, and and you save about 150 in the average. Uh, every 6 months doesn't seem much, okay, but something is better than nothing. But then when you visit some family that they have young children and it costs them. I mean, I have a 16 years old still in high school, and his insurance is just like blowing up, right? And he try to, young kid, they always try to show up and drive a nice car, right? Well, daddy, if you don't get me, so, and that even costs even more on comprehensive and collision. So, but then when I keep telling this because the family only have three cars and they have the 18 years old kid, and I'll be able to come in and they're paying 7,700 and some change for every 6 months, and they calling me over and check it out, and we'll be able to. So half of it, right, is liability because they have two Tesla car. I don't know why Tesla costs a lot of money, insurance on comprehensive and collision, and a Prius. So then half of that is 3,500 is they pay toward the liability part, right? And the 3,500 is more is around there paying for comprehensive and collision, and they only pay 720% of 3,500, roughly around 700 upfront, 20%, and then 2,800 left. So they're looking at like saving, like I said, half of that in the average, half of that 3,500, which is coming out about so 3,000 is 1,500, so about 1,800 or so, and I'd be able to use that money, $1,800, to move it into her daughter, um, you know, kind of like a retirement plan for that 18 years old, right? So, and by the time you just keep it the way it is, by the time she's reached 65, she have a cash flow in that account more than $1 million. So, I mean, who does that? How? So that's where my excitement from. Yes, awesome to get uh, Tesla Model 3. Awesome to earn. By the way, Brigham forgot to mention you get paid instantly.
Oh
Okay.
yes, that's right. Thank you for
ID
reminding me
pre,
that.
come
Yeah,
on, ID pre, Brigham, you gotta bring that word
I
in.
gotta remember that all the time.
Yes,
Yeah,
ID pre,
I
instant
forget that that's not
daily.
very common in the industry.
Yeah, instant daily progressive. If you play lots jacks, what you call that, slot machine. You see the progressive, it keep going up,
Yeah,
because why? Because it's referral base. You don't know who you might hit the guy, the person that on her or his social media like 10,000 follower, and if you have recruit or have that person enroll, they just put one line of advertisement, and boom, 100 cars enclosed, 1,000 car, enroll. You never know, right? So it's progressive, right? And residual, passive, progressive, and passive. That means you don't have to do anything. It's not coming from you. Passive, residual income, residual keep going,
That's right.
income.
Hey,
So
partner, it looks like we have some raised hands here with questions or maybe comments.
yes, here, Dave. Dave, how are you,
Yes,
buddy?
I'm
Yeah.
good, thanks.
hmm
I apologize. I'm kind of late to the
No,
party
no,
today.
no. You're good.
I was
I
stuck in
didn't see
another
the
meeting.
hand raising
Will there
there.
be a recording for this or that I sent
Yes,
out?
Dave. Yes.
Okay.
Yes,
And
Dave.
then my more involved question is my car doesn't qualify. So to maintain my temporary code, does that take just eight uh, cars? Or somebody said I have to be
Yeah.
included in one of their policies or something?
So yeah, so if if being included in a policy or getting an eligible car isn't an option, then what we can do is yeah, we can grant you with we call it a temporary referral ability. But if you just bring 8 cars within 20 days, that referral ability becomes permanent, and
Oh, I
then
think
you can yeah, and then you can just
You mean
to
for
refer
30
people.
days?
I was
30
thinking it was
days.
30 days, and so
I'm
I think
sorry. Yeah, sorry. 30 days. I'm thinking of the bonus.
The bonus.
okay,
I want you to get paid more. So
yeah.
Yeah.
20
Well,
days, yes.
and I've been bogged down with a lot of other stuff. I'm just getting going on contacting people now, but I think I'm like a week away from expiration. What happens if I'm actively pursuing and I expire before eight
Hey,
signups?
Yeah.
get close to those 8 cars, within that time period, and I'm sure I can make a plea to extend you a few more days.
Okay. Um,
Get to like 5 or 6 cars, and I can make a plea for you.
okay. Otherwise, I'll sign in under a different name.
There you go.
All right.
Uh,
Thank you.
Yeah, you're
all
welcome.
right. And the next, Joe. Come on, Joe.
Hi, is this available in every state?
Great question. So we're not available in Alaska and Hawaii, and that's mainly logistics. We have this amazing network of shops, right? Where the goal is to be able to provide you great service, but also keep the cost control low. And those states just don't provide us with the necessary network of shops that we need, so we don't. And then Massachusetts, New York, and Hawaii, I'm sorry, and Rhode Island, they have some very specific laws around all types of insurance, and so we can't do everything that we need to do. So we just rather not do business there. Uh, that means we don't accept their residents. However, we have shops in the area. So if you live in Connecticut and you're driving through Massachusetts and you hit something, right? Bad weather and you hit a pole, we have shops in the area that will take care of you. You don't have to, drive your car all the way back to Connecticut and use the shop there.
Well, I live in Massachusetts, so this isn't going to work for me.
Oh, dang
Yeah,
it.
yeah, you can
Well,
be a affiliate.
yeah, we can do something like we do for a day, for example, right? So you can come in with an invitation for referral abilities. Do the 8 cars in 8 days or in 30 days, and then you're good.
But I can't do my car's in Massachusetts then,
No.
correct?
Yeah, you wouldn't be able to do your car right. So you have to be just an affiliate, straight out affiliate.
But then I couldn't do anybody else's car in Massachusetts.
Not in Massachusetts, correct. You would have to think
Okay,
about,
well,
yeah,
thanks. I'm all
yeah.
done. Thanks.
Okay.
Bye.
Thank you, Joe.
And Donna, unmute yourself. All right. And Dave, you have more questions? Dave? I guess he's good. All right.
I'm on. I'm on.
Oh,
She accidentally hit the phone to put us on. I already had us on. Is it 2006 or seven for the minimum year?
So now it would be depending on, I guess, the car, but it would be right now would be 2006
right.
because it's 20 years, for like Japanese brands, Korean brands and all those. It would be 20 years.
And is that also, is it based on mileage?
So we don't really care how many miles the vehicle has on it. We do care how many miles the vehicle drives once they join us. It can't be more than 30,000 miles per year.
Hmm.
Yeah, and it's just a risk, risk aversion, if you will. Somebody who drives 30,000 miles, it's exposed to a lot of driving. So we want to keep that as much as we can on the low end.
Okay, so I need to find a mechanic that knows how to turn the odometer back. Thanks. Okay.
No, but again, just remember, we don't care. Maybe you have a car that you drove a lot before, right? But from now on, it doesn't really matter. Like, I mean, sorry, from now on, it's all that matters. Before, it doesn't matter.
That sounds good. The first time I heard this, I was interested, but I was late, so I didn't get to hear everything. The second time we heard it, we heard kind of the other end as we were getting out of a meeting. And then I heard it again, and I'm like, oh my God, because two things. We've had those things on our business card where you get, help with this, help with that, but you're paying that an addendum to your insurance policy. So
Mm.
it's, it was very pricey. And I'm telling you, nothing ever happened when we had it. After we took it off, that next month something would go out and big something
Oh,
big. So, it was really irritating. But for this is a win-win either way when you look at it that way. Plus, even if you're an old lady, which we're not, but if you were an older person and you don't drive or you live in like some city and you don't drive, you get take Ubers everywhere, it doesn't matter because you can still work this. But I was gonna say, and we pray for the businesses every day that we're in here, but no matter if anything happened to the FICA taxes, to the R&D, to any and everything in business, this is the foundation, and this is a program of programs right here. So it's something, even if you don't live in that state, it's worthwhile. Advertise or do something because this is a gold mine. We were at the beginning, initially with prepaid legal, and that was an insurance for everybody. And then there's another insurance out there, but we didn't get to really get into that because we were working our other business. And we missed out on it. We missed out on the Palm Pilot because, a lot of the guys were talking about it, the chicks didn't really know. So they didn't really tell the chicks very much. So we missed out on that. This one, we're not missing out on. And we're really excited. You guys are really the CCs, the casino, Casanovas. You're exciting when you talk about it. So it's not a drag to hear you talking. We got the best business in the world here. Thank you guys.
Yep,
oh, thank you
yep,
so much, Dana. Appreciate those words. It
yep.
really is the business
Larry,
of businesses.
yeah,
Is
Larry,
it?
quickly, we got about
I
a
have a
minute
real
Hey,
or
quick
so.
question. Is
Mhm.
it
hey there.
Say,
possible for us to post on LinkedIn without running afoul of their
yes,
rules
you can.
Yeah,
Nothing
and other
stops
social
you.
media? Okay,
yeah,
thank you.
Right. Yep.
yeah.
Okay.
Hi
Larry.
there. Yeah, hi. I just
Hi,
wanted
Larry.
to, I have an eligibility question. Can you hear me?
Yes.
Loud and clear.
Okay, great. My car is old. It's like 2008. But I do not drive. I mean, the driver before me had a lot of miles, but I work from home. So for the past 5 years, I've been kind of just creeping along. Is my car going to qualify?
Hmm.
So let
Potentially,
me
right?
let's do this. Larry, I'm putting my phone number here in the chat. Okay.
Great. Okay, see it.
And so just write it down and send me a quick text. I'm trying to run down the situation because yeah, Stan did make me aware of it. So I'm just trying to run
Okay,
down, what happened. But let's be in
sure.
contact, you and I directly, and then
All
we'll
right.
we'll get this
Thank
figured
you.
out.
Thank you, Brigham. Bye-bye.
Yeah. Bye bye.
All right. Anyone else? All right. We on. And if you have questions, just reach out to Brigham because I know, because of time, the next speaker, amazing, very successful, and he is just blowing it in the health industry, um, making like six-figure monthly. That's crazy. So he gonna share with us how it works and also how to, you know, build your business on this group health industry.
You can
So
put it on now,
welcome,
sweetie.
the man, the myth, and the legend. and moved to Southern California, warm
We're
during
close by. It's the nice weather.
the
We're
nice
very,
weather.
we're very
Um,
blessed here.
yeah, Mike Hinsvard. All right.
Hey, you guys, one of the proof that this product is so powerful is companies want it. I mean, agencies want it. Okay. And part of the secret to our success, you guys, is we've introduced this to companies bigger than Dreams, okay, with 7,000 agents. Dreams has 7,000 agents, okay, but other agencies bigger than that want the product, okay, and we can dial them in a direct contract where they don't join Dreams, but we hook them up with Quantum, and there's income in that for you. We call that a channel partner. When an agency with usually at least hundreds, if not thousands of agents, wants to add some of our products. But one of the big agencies that we brought to the table initially for Quantum, they looked at Champ and they said no, their attorney. And then we first had to present it to their attorneys. Their attorneys liked and approved Quantum. And so this passed. You guys, we're talking to a company on TV all the time, right? One of the biggest, insurance companies in the country. And then, but they said that they asked for this after we, showed them Quantum, and they got permission from the COO of this giant company, and then that COO is now the CEO for them to do it. And they said, we're looking for a health insurance product for our agents to buy, our thousands of agents to take advantage of for their own families. You guys, and we have that too with LifeX is like an unbelievable product for agents, for independent contractors. But again, the secret to everything is doing groups, right? So signing up not just one realtor at a time, but signing up their whole real estate office, right? So there's big opportunity in health products like Andrew mentioned. And I think, group health this year, 60% of companies are looking at switching their group health. On an average year, it's 15 to 25 might look at switching. On the highest years in recorded history, 40% of companies were open to switching. And in 2026, 60% are looking at it. So never before in recorded history, even close to what's happening this year, because companies recognize they're being ripped off. Okay, very clearly it's rigged. And so they're open-minded to that. But still, the way you get your foot in the door is not group health. It's with the Quantum, because this is putting money back in their pocket, like FICA tip credit, like R&D credit, like ERC was, and so Quantum is a better door opening conversation for a business with 25 or more employees. They have agreed to make an exception to go down to 10 if you recruit a chamber of commerce. So if you partner with the Chamber of Commerce to be able to offer Quantum, the chamber actually signs up. The chamber does join Dreams, okay, and gets a code number. And then you do split sales with them. They end up getting $3 per employee per month in perpetuity, like an annuity, like an endowment. But if you recruit a chamber, then their members, we will go down to 10 for all the chambers for Quantum. So the only exception is because the chamber's pushing it out to their list of hundreds or thousands of business owner members, and we want to be able to help as many of the chamber's members as possible. But so the way to get under 25 is to recruit any chamber you're a member of. It's not for a business that just happens to be a member of a chamber. It's for a business that the chamber is a member of partnering with you. You guys, I recruited a chamber. I didn't. I helped somebody bring in a chamber in Oregon, north of Portland, but a big chamber. And they did the Quantum for themselves first, okay? And now they're promoting it to all their members. But the president asked me, hey, can we make this exclusive that the only chamber you can buy this through in Oregon is from us? I said no. Okay, no, but I appreciate them asking, right? So this is a great way chambers are great recruits, okay, for all of these products, okay? So here's a couple brand new slides for Quantum I'll give you guys today, and I'll get out, right? In and out, cut to the chase, you guys. That's what I like to do. When you're marketing any of our products, you got to be, you got to make a connection, but you got to also cut to the chase. Okay, so this slide, I'm going to put it in the chat because it's a little prettier than the slide before. This is kind of like the new approved one, okay? And so this is the new first slide, which gives you all the cool info. And I'll give you a couple of the new slides. Proactive, fully insured supplemental solution reduces healthcare costs, boosting employee benefit. The key word there is fully insured. Works alongside, not in place of your existing major medical. Zero out-of-pocket cost to employees. Most employees will see a net increase in their take-home pay. Employers gain $600 to $900 per employee per year in FICA tax savings with no net cost to the business. There is a $35 admin fee, but there's on top of that, after they pay the admin fee, they're saving $600 to $900 per year. Fully insured, backed by national carriers, tax advantage, 125, available in all 50 states. Guys, this is the only fully insured plan approved in all 50 states, and it's the largest fully insured plan. And that's really the key to why it's different from the others and better and more compliant, okay, than the other companies. And you can land bigger companies. The biggest objection will be it's too good to be true. Who's paying for it? The federal government amended the Affordable Care Act in 2014 to allow employers to offer financial incentives to employees who participate in certain wellness activities. That's what created this program, made it possible. This is the benefits, is a new page too. I'll put it in the chat. I like the way it lays it out because it laid out the benefits that are for the whole family over in this corner. Now, businesses don't buy these plans specifically for the benefits, okay? No business is really out there like actively, we're looking for a supplemental benefit plan for our company to offer, said nobody ever, okay? But they will, they like it, but they're not looking for this, right? If we were selling supplemental plans, this is a product I would never sell. I would not put my effort, energy, waste my time selling a supplemental plan for the medical benefits because, it's such a tough sale. But when we can show a company that with 100 employees, that they can save $7,975 a month, okay, keep going. You have my attention. You'll save $95,000 a year after the $35 admin fee is deducted. That's my net savings with 100 employees. That's your net savings. So we have a company now with 5,500 employees. So, the numbers are exciting, you guys. 5,500 employees. And they want to sell the company. So they want the quantum plan installed as soon as possible. So they're in a hurry to get the quantum plan, okay? Now, 5,500 times their savings, let's just say it's 800, is 800 per employee per year. That's 4.4 million. Let's say their earnings ratio, EBITDA, is 5 times. So it'd be 4.4 million times 5. It's the venture capitalists who are doing it. So if they sell the company with quantum and it has a 5 times earnings, it will make the company worth 22 million more. The company's valuation is $22 million more. Now, what would an agent make on a case like that? Somewhere between 12 and 18, right? So let's just do it. And I'm just going to say 5,000 of the 5,500 are on. Okay, 5,000 times, and I'll cut it down the middle. 15 would be 75,000 a month to the agent. You guys, it's insane, right? Now, the benefits are, $1,000 a day if they go in the hospital for 30 days. I presented this yesterday morning to a school in Vermont. They had like 300 employees. It was 2 degrees outside. they had a half hour worth of questions, but they were blown away by them. They were impressed with the indemnity benefits. 1,000 a day, they're all 30,000. Yeah. And they were like, what about if our Blue Shield covers everything? I said, they still get the 30,000 and it's not taxed. It's not, they don't get a 1099 for it. So 500 in the emergency, 500 for the ambulance. They have 1,000 for critical illness, 2,500 for critical illness. Hold on, you guys, I got a little bit of a cold, so hang on one second. Been working too hard. Okay, so you guys here, so 1,500 for emergency, 500 ambulance, 2,500 critical illness, 1,000 for the accident, 1,000 for surgery, 400 for anesthesia. Those are the cash indemnity benefits. So I go through them quick because I'm not here to sell them a health plan. That's what you guys, you know how we say human resources is where good ideas go to die. Okay, and that's for all products, just so you know, by the way. Okay, even health, you kind of want to, we want to be selling health to the owner and CFO. The reason they're buying health from us is not because of the benefits are better, it's because it's saving them 40%. Okay, and so it's a financial deal, right? And so human resource people, you know, if you're a health agent, you're thinking that this is why they're buying it, and it's clearly not the driving force of this decision. It's you know, a small part of it. But I love how they put the family benefits over here. Prescription drugs, 1,100 drugs, telemedicine. Oh yeah, I didn't put this in the chat yet. For the whole family, and virtual veterinary care for all the pets. So you guys, half the companies that have group health insurance, half the employees don't subscribe because it's a ripoff. It's super expensive and it has a huge deductible. So they figure I'm going to pay these $3,000 a month mortgage payment premiums and never get to use it anyway because the deductible is so damn high, right? And so, you know, a lot of the people don't opt in, even though it's subsidized. But guess what? With this plan, everybody opts in because it gives them a $100, $80, $125 a month bump in their pay. And so now all the families get prescription drugs, telemedicine, virtual veterinary care. I'd much rather, if I can handle it on a Zoom, right? Do you really want to go to the emergency room? That's where you go to get sick or ready. Right? That's where all the sick people are, right? In the emergency waiting room or the, you know, ready care, right? You know, those places. That's where you go that's where you catch a cold, right? Now, Zig Ziglar coaching, six one-on-one coaching sessions a month, health and wellness or personal development. And then the CPT codes generated by the American Medical Association for watching one short 3 or 4 minute video or reading a 2 or 3 page article once a month. If they forget, that's okay. They'll send them a registered email. That counts. So in their paycheck, they will receive a $1,200 claim payment and they'll pay a $1,500 health premium. So $1,500 is more than 12. They're going to deduct 15, put back 12. The 15 was taxable. The 12 is not taxable. So their take-home pay is actually going up. It's like a miracle. They were taking home $33.13. Now they're taking home $34.09, an extra $96 a month, because their tax withholding went down by more than the cost of the plan. The plan actually costs $300 a month because the difference between 15 and 12, 15 coming out, that was taxable, 12 going back in automatically, just like a 401k match, that's not taxable. And so there's tax withholding went down by $396 a month. Subtract the 300 for all the benefits. Their paycheck, their take-home pay goes up 96 a month, 1,153 a year. And the company's saving 957 on that one employee. They have 6 plans to accommodate part-timers as well, going down to as little as taking out $675 and putting back $625. 90% of all the employees on Quantum, and they have close to 200,000 now, are on plan 1 and 2. So this is like 40,000 a year and up. And so very few, you know, but this is still better than nothing. So their part-time people can still get some coverage. And then, but the real reason, the real kicker, you guys, is this slide. This is it. This is why they do it, okay? Not because of these not here. This isn't the driving force. Those are cool, though. Those are real. That's what, you know, that's why it's getting the tax break. This is the driving force. Would you like to save 8,000 a month? If I could save your restaurant 8,000 a month. By the way, this is just going to go hand in hand with like we did a restaurant the other day, 1,000 employees, not at one location, right? With turns out they have a bunch of locations, not 1,000 employees, 900 tipped. So they're good for big giant FICA. They're good for a big giant R&D. They're good for a big giant quantum. You guys, it's multiple sales to the same company. And so, but you guys, it was 1,000 employees. So that'd be 79 or 80,000 a month that would save them. 80,000 a month. And then we'd come in and try to get them on a goal program or whatever, right? Group IUL. And so this is if I'm only allowed to show one slide, this is the one I would show. Right here. So they'll be like, okay, you have my attention, right? And so if it's 1,000 employees, it's 600 to 900,000, 3 to 4.5 million a year in valuation increase. If it's 10,000 employees, we'll see you later. You'll buy your own island, and you'll be off to the races. 6 to 9 million savings to the company, 30 to 45 million. The commission on 10,000 employees, which isn't impossible, 10,000 times 18, 180,000 a month. Thank you very much. Okay, now you guys, this is the app everybody gets, of the employees and their family. Free download, telemedicine, prescriptions, wellness library. Everybody gets access, multiple languages. This is Aflac or Colonial on steroids. Every employee qualifies for all the benefits. Now, what if guys? What if the employee's in the hospital while they go live with this? Are they covered? Not on your life, okay? It's not that magical. Okay, so if they're laying in a hospital bed when the plan goes live, okay, they don't get coverage. They have to be out of the hospital when it starts, okay? Now here, this is the IRS, Health and Human Services Department, in the Department of Labor, basically saying the employee can use the additional money in their paycheck or the checks they get on indemnity benefits to pay their mortgage or their rent. Some people who sell 125 plans that are self-insured, not as good as this, they take the savings, and instead of giving it to the employee, they try to, they trick them into buying another policy, like a whole life policy or something like that. And they don't tell them that they don't have to buy the whole life policy. They could just keep the money if they wanted, because they make more money if they do that. But if you do that, one, you're just being misleading, not telling them, hey, you could just keep the money if you'd rather have it for your family. They don't bother to mention that, because then not as many people would buy the policy. But also, it just makes more sense to let them do what they want with their own money, right? And so I recruited a guy who worked for a company. So we don't tell them that they can actually keep their own money. If you try to side pitch them another product like whole life with the savings, you have to then do manual enrollments, one at a time. The end of the world, hell on earth, forget it, no thank you, not happening. We get 100% participation because it's an auto enrollment, okay? And part of that auto enrollment is giving them the extra money for their family. They can buy whole life if they want with it, okay? But it's their decision, okay? It's not us trying to pitch them on it directly, okay? So Quantum implements the plan, seamless, smooth. They do the enrollment to all the employees, show them their benefits, how to file claims, how much their check goes up. That's the magic secret formula. We give them ongoing administration. We manage all new hires and fires, and we integrate with all payroll software and payroll companies on the market. All we need is a simplified census or a payroll register report or a payroll journal to do this. And then we'll come back with a proposal customized for your business. It's a real proposal for a Ford dealership in Northern California. 219 employees, $833 per year per employee. That's what they're going to save, $182,000 a year. And the employee's average check's going to go up $1,100. They get a statement on every employee's before and after check and how much it goes up, and they can drill down to the pay stub. And the business owner gets a statement for how much they save per pay period, net of the $35 fee. So that in their pocket, $79.75 a month or $39.88 per pay period. And you guys, I'll just finish with this. These are some real companies. This is a city we helped. 183 employees, 122,000 saved. That's a 2,200 a month commission. Here's a hospital in Tennessee, 396 employees, 361,000 saved. That's a 5,700 a month, 70,000 a year commission. This is a private university, 2,000 employees, 1.7 million a year saved. That's 36,000 a month. And this is a 22,000. Oh no, I skipped one. 2,200. Oh no. Okay, I skipped one. We have one with 2,200, and that's 40,000 a month. This one's 22,000. This is a real client. There's two big restaurants like this. That's 22,000 is
Right.
48,000.
All right, honey, I totally get it.
Okay, it's unbelievable, you guys. So last but not least, you guys, we can then figure out if they need health insurance, and if they do, we will come behind and replace their health insurance, double or triple your commission if you have a health license. So we have the best service support, 154 carriers. We have it all. That's all I wanted to cover today. Andrew, back to you, my good friend.
Mr. Hinsbark,
Awesome, guys.
I have a question. I have a question for Mike Hinsbark.
Yes.
Yes, I can take your questions.
Oh, I know. Well, that's really good. So really excited. I know I saw Rick on the Dreams call today. How's it going on? He had a very big quantum deal. Is everything moving up forward with that? That's one of my biggest ones. He's in my downline.
I think was it 1,500 or 1,400? You know, I hung out with Rich the whole time. We were working out in the field, and it is moving forward slowly but surely. It's all positive.
Next question. That Ford dealership, is that Delfino's guy that he did the ERC for?
It's not. Really? It's not. That's a different Ford dealership.
Wow. That's super impressive. And it's pretty exciting because, you know that we initiated the FICA Chips program, and it's awesome because the people that we talk to, you guys talk to restaurants. You said, I think when you were out, hey, look, they can also go into quantum, which it's a good door opener. So great, Mike. Wonderful job. We love having you on the call. Thank you for showing up a little earlier than last week. We were on till 4:00 Eastern, but that's okay. You're worth it.
Hey, it wasn't my fault. Okay, you guys went long. All right, thanks, you guys. Take care.
It's okay. No problem. So that is going to leave the door open. And I like seeing your river. You're back in Canada. That's awesome. I love the Canada River.
I do too. I love my own background. Okay, thanks. All right.
Yeah, very good. So that's going to open the door up for our next guest speaker, Mr. Black Swan himself, who I've nicknamed Mr. Hoity-Toity Black Swan because he's a member of the Newport Yacht Club. Oh my gosh! But Mr. Sheldon Singleton is going to come up next. We will have Stephan on. He was on with another big group.
He's on right now.
Yep. He'll be coming on in a minute. But Sheldon's going to give just a quick overview, Andrew, of our private reinsurance program, and then we're going to launch into FICA tips. So, Mr. Sheldon, why don't you come on and give us an overview of what we got going today?
All right. Hey, everybody. Sheldon Singleton here. Hope you've been doing good. And Andrew sent out the YouTube link on some training that I have done. And because YouTube is very effective at things not buffering. And that was the challenge that was happening, where it was coming from. So what I am going to do is, Andrew, I am going to go to my share. Here we go. Image, share camera, image, URL. All right. Screen. There we go. Start now. All right. You guys can see the screen and see me. And let me go right here. So what I'm going to do is, here's a cool thing about what we're doing. We have a lot of, I'm going to make sure I get I'm going to stop the share because the one key thing is to make sure the audio comes on. I'm on my tablet. See, go back right here and go back to my Zoom. All right, Stephan, how you doing, man? You look rested.
Yeah, I am. Sorry, I didn't mean to cough in your face.
No, don't worry about that. I just want to make sure when I do my share that the audio is going to be on the tablet. It may be different. Okay, start now. And we see your face, Stephan.
Hey, no bags. Look, no bags.
No bag.
Wow, you look really good. I'm
Oh
glad
yeah.
we sent you on that trip.
My fiance was like, she's like, you're actually taking naps. I'm like, yeah, I'm gonna catch up on some sleep.
Yep. All right. I'm making sure maybe it's different on the tablet. So I'm gonna go right here. All right, you can see that. All right, we got lots of tools to help business owners. That's the cool part. We have Stephan, who is the fourth largest tax resolution firm in the United States, which is kick butt, because when you're talking to people, you want to talk about credibility. Because when I'm out there talking to people, I say, hey, I have a tax attorney that's part of my strategic relation network. And I said, this tax attorney is a specialist in tax resolution. He has the fourth largest firm in the United States, and he's out of the box. He's always looking for different things to help business owners save money, and most important, to keep their money. So one of the things, we call it the tax unicorn. I always ask people, hey, are you familiar with a tax unicorn? They say, what is a tax unicorn? I say, imagine, what if there was a way where you can minimize your risk and turn that into a profit center? Because we all pay for insurance all the time, praying that we never use it. And every time I say that, everybody says, you're absolutely right. And I said, the matter of fact, here's what happens is that's profit for the insurance company. And I said, you think about all the different insurance you have and you never use it, and think about how many years you've been paying the premium. That's profit for the insurance company. So you, Mr. or Mrs. Business Owner, what if we can show you what to do, what the insurance company does? And then they like what they hear. So I'm going to click this. I'm going to play. We got an IG side. So I'm doing an ER3 plan that this helps turn a privately producer-owned or privately owned reinsurance company into to fund, super fun, as Stephan says, your retirement plan. I'm going to go over this, and then Stephan's going to jump right into ER3. So let me know if you can hear this on the tablet when I hit it. Can you hear it?
No, Sheldon.
Nope, can't do it. On the tablet. Let me stop this.
You want me to try?
Yeah, once you do it, Stephan, because I'm on my tablet, it didn't pop up with the share sound.
Okay,
So I'll let you do it. I'll stop the share for me,
okay.
and I'll let you do it. All right, I want to stop the share for me right now. Stop share.
Give me a sec. Keep talking.
Okay. And by the way, I've been talking about the ER3 and all the different programs to businesses I meet. So I'm going to give you, I do it like the 1-2 punch. You know, if there's a restaurant owner, they do $4 million a year in gross revenues. I asked them about, hey, are you familiar with the FICA tips tax credit? And then they said, yeah, we think we do it. And Stephan educated me that payroll companies don't do it. They may give reports when these business owners do think they're doing it. I have one restaurant owner says he has he works with a tax professional that only does stuff with restaurants. And he says this tax professional is all over this FICA tax tips credit. And then that was the one punch. The two punch was, I said, hey, how are you familiar with privately owned?
Hello, and welcome to this short briefing.
Okay, let me finish this real quick, and then you started, Stephan.
Sorry, I didn't mean to start it. I didn't mean to start it. Sorry.
Oh, okay. Are you familiar with privately owned reinsurance companies? He said no. And then they start complaining about how much they pay for insurance. I said, what if there was a way we can turn what you're paying for insurance into a profit center for you? And then the beautiful part is help lower, there's a way that we can help lower the premiums you're paying over time. They are interested in both. So for all of you, the FICA tips tax credit is hot, but I want you to think about the 1-2 punch. FICA tips tax credits hit one. And then if the restaurant is very successful, bring in a privately owned reinsurance company. 2, even the yacht clubs, Stan, I talked about the yacht clubs, they can even qualify for it. You know, that's what Craig told me yesterday. So I'll be talking to some of the yacht clubs and seeing, you know, bringing that in. So, okay, go for it, Stephan. I just want to give that lead in.
Okay, I'm going to run this.
Interactive, so you'll be asked to click your screen from time to time to see only what you're interested in seeing. And no matter where you are in the world, we believe you may one day look back at this very moment as a turning point in your life, because what you're about to see could turn your business risk into a long-term, super-funded, tax-free retirement plan. Introducing the ER3 plan, a strategy that lets business owners turn underinsured risk into tax-deductible premiums and grow that money tax-free inside a retirement account they control. More on that later. But before we dive in, let's tailor this experience specifically to you. No problem. We'll keep the explanation straightforward so you can understand the strategy without the financial jargon. Starting right now, you too will know the strategy used by Fortune 500s, financial pros, and high-earning businesses to grow your income with the ER3 reinsurance plan. So let's get started. Here's where you choose where you want to go. Click the topic you'd like to explore, then finish up when you're ready.
Hey, Stephan, go over three slides, because I know Stan wants us to get on the FICA
Not all
tips.
private insurance models are created equal. Some use offshore entities. Others mitigate risk through unrelated businesses.
I hate this.
Many are structured as micro-captives and flagged by the IRS for abuse. The ER3 plan takes a different approach, utilizes a domestic, domiciled, tribal-regulated insurance company backed by licensed actuaries and designed for compliance. There are no offshore accounts, no risk pooling, no trustees, no administrators or outside managers, no micro-captive designation, and no IRS red flags. Your own preferred shares in the reinsurance company and your premiums are directed there. Claims are handled independently, and unused premium is paid out as a dividend into your self-directed Roth IRA or Roth 401k, where it grows tax-free. This structure gives you the flexibility, control, and confidence, all within U.S. jurisdiction. Go ahead and choose another topic to learn about, or click Finish Up when you're ready.
Hey, Stephan, hold it before you do that. Hey, yesterday I was meeting with a person who's about to start another yacht club. I told them about this and their mind was blown.
Yeah. It's an amazing program.
They were just, oh my God. And they said, this is why the rich keeps getting richer. And they're starting a yacht club in Newport Beach.
Yeah.
And they didn't even know about this. So I just wanted to let you know this right here. Go on, Stephan.
Yeah, so like with the Latitude plan, you're actually acting as your own bank, very much like Warren Buffett does. Or with the ER3 plan, if you have a need for funding a retirement or even catching up a retirement plan into a Roth, it's an incredible program. The nice thing about it is you can do both. You don't have to. I mean, we can't share more than the insurable interest, but we can bifurcate it into two different programs. It doesn't have to be one way or the other. It's really about the needs and desires of the client. What's most important to them? Growth and be able to fund that growth, or retirement, or a combination of the two.
Yep. And just to let you guys know, we're talking to a very high level law firm, wealth planning firm about this. And they said the way this was designed was it was ingenious. And they deal with clients that from $5 million to $300 million a year, and they have a gigantic network. So I just want to let you know that, because I know this is it's not as easy as the FICA tips tax, because that one's real simple. But do not discard this tool right here. Go for it, Stephan.
And what Sheldon was just talking about is kind of a vetting process, if you will. I mean, this is a high-end law firm that's not going to get involved in anything that could blow up in their own face. So they went through and did the research and asked us the tough questions, and we're happy with what they found.
Okay, let's hit the ER3 plan, and then we're going to go to what could my numbers be, and then we're going to hit FICA tips.
Okay. Oops, let me turn the sound back on.
Here's how it works. First, you establish a self-directed Roth IRA or solo Roth 401k. The custodian uses at least $50,000 from that account to purchase preferred shares in Alliance Reinsurance Company Incorporated, ARC. Next, your business pays a one-time underwriting and setup fee, and then begins allocating premiums based on an actuarial risk report. Those premiums are deductible and routed through a licensed fronting carrier, which passes them on to ARC. ARC holds the funds in reserve, covering legitimate claims. The underwriting profit grows tax-free within your Roth IRA or solo Roth 401k. No deferrals, no corporate level tax. Just tax-free investment growth with the ability to take tax-free distributions after age 59 and a half. Now, here's how we're different. Insurance Specialties, our underwriting partner, keeps it simple. We don't use trusts, require third-party trustees, or state filings, and we don't hide fees behind legal complexity. No offshore jurisdictions, no micro-captive red flags, just a fully compliant, transparent structure built to help you grow tax-free wealth by managing business risk smarter. Go ahead and choose another topic to learn about, or click Finish Up. Great. For you to see what your numbers could possibly look like, please enter your estimated annual gross revenue.
All right, so Sheldon, what do you think? 10 million for your yacht club folks? I think good number.
10 mil.
Thank you. Based on the gross revenue provided, this is how much you could potentially deduct from your income for additional insurable premiums. And based on a typical client's private reinsurance company expenses, this is how much could go straight into your Roth IRA at the end of the year. So you get to deduct the premiums from your top line revenue as a business expense. Remember, gross revenues less expenses determines your tax basis. Then the net profit of your private reinsurance company is available to be distributed to your Roth 401k or solo 401k as a tax-free dividend. Starting to see why business owners everywhere are loving the ER3 plan? Go ahead and choose another topic to learn about, or click Finish Up when you're ready.
All right, hit Finish Up.
Yeah, let me just kind of touch on that really quick. So what you're getting in this scenario is you're getting a tax deduction for $1 million. The business is getting $1 million deduction. And after expenses in this scenario, $800,000 has gone into the owner's Roth account. The owner being the Roth is owned 100% by the business owner's Roth. And that's where the $800,000 ends up. So a unique circumstance, $1 million deduction off the top line of the business, and $800,000 ended up in that Roth of the business owner. That's what happened in this scenario. Very unique program. So it completely avoids the whole contribution rules that apply to Roth, because this is not a contribution. This is a dividend. Very much like, Tesla had a really good year and issued dividends, and your Roth happens to own Tesla stock. Very much the same thing. I want to make sure everybody got that. That's a very key point.
Yep. So it's kind of like a brand new financial instrument / conduit, and this is what has the law firm interested, and a lot of other big folks are interested in it. And hit the Finish Up a minute really quick. Okay, so
initial feasibility conversation. Initial conversation to determine if your business qualifies for the ER3 program. Step 2. Establish or convert a self-directed Roth IRA or solo Roth 401k account. You'll need to contribute or roll over a minimum of $50,000. Step 3. Direct your custodian to purchase preferred shares in the ER3 program using those funds. Step 4. Complete a brief interview with a third-party actuary. They'll review your business and determine which additional risks are insurable. Step 5. Send your deductible premium to a licensed unrelated insurance carrier, which is where the structure becomes active. Step 6. Each year, if no claims are made, surplus funds are reinvested back into your Roth IRA or Roth 401k tax-free. And the best part, we walk you through the entire process. Click your screen to schedule a 30-minute discovery call. We'll walk you through how the plan works and what it could mean for your specific business. We'll also cover what risks you may have, how premium funding and tax advantages apply to your business, and what setup would look like based on your goals. This is the simplest way to get clear, expert insight and to see if the ER3 plan is the right move for you. Thank you for your time and have a great day.
What a cool presentation that is.
Yeah,
Wow.
yeah.
You don't have to be an expert at it. We have this eye-to-side that's designed so you can basically share it with people. Like all of our programs, you don't have to understand it or be an expert. Just basically get an appointment. You get an appointment by showing it to someone, and then they're going to schedule the call, and guess which with? Stephan, which is great, especially good in that 1-2 punch. We might have hit somebody on FICA tax, and wow, we already have some of their information. We know about it, and, we can look at how do I save even more, which is cool. So anyhow, we'll be talking more about that next week. We do have a special, I call it the tax unicorn meeting. It's the meeting we do before our FICA tax meeting. So if anybody's interested, just let me know and we'll make sure that you get an invitation for that one. Okay, without further ado, here we go. Sheldon and Stephan, it's your show. Take it away.
All right, Stephan. Hey, this is really cool because after Stephan educated me about it, I started talking to people. And here's how you learn about this. Go out there in the field and just start talking to people. I didn't have all the brochures. I just read through the website, picked out certain words in here. Stephan already has it on there. All we have to do is say it. And then people are interested. And then that's how we get their numbers. And then they'll say things to you that you go, that's an interesting question. Then I go back to Stephan, and then Stephan breaks it down even further. So that's my recommendation for all of you. Just get out there. Once you sign up, you got the video I put together for the back office. You got the video for filling out the application correctly. So everything should go through smoothly now, and you won't stand crazy. So Stephan, go on and explain this right here.
All right. So for the most part, the biggest thing you have to know is 80 to 90% of businesses miss this deduction. And to have an understanding of why, the primary reason is, the business owner's thinking there's a couple of people that are taking care of them. One is their payroll company, and their payroll company is not taking care of them. Their payroll company view this as a liability for them to try to calculate how much they should not be withholding for the FICA tips tax credit. So they won't do it. They consider it a liability. So what they will do is they'll withhold taxes, FICA taxes, on all of the income that's taxable. That's the most conservative way for them to process their returns. Taking any other route, they view that as a liability. They view this as the business owner's responsibility to go after this credit. It is not the payroll company's responsibility. So the next one that you'd think would take care of this is the tax preparer. Well, unfortunately, the tax preparer does not have the time during tax season to pursue this. This is a time-consuming process to determine how much how much they can get in a credit for each year and then amend returns. They don't have the time. even if they were given the numbers for the 2025, sure, they would take it and they'd probably plug that credit in, but they don't have the time to find out what the credit should be. So there's the second reason why the 80 to 90% of businesses miss this. And don't be surprised that when you talk to people, they go, I've never even heard of this. Nobody's ever mentioned this before to me. I didn't know I could avoid paying FICA taxes on those tips. I didn't know there was a credit that I could get money that I could get back, and it's substantial. The median refund is $101,000. That's the median refund. Throw out the lows, throw out the highs. That's the median. So this is a highly underutilized tax credit. And you're targeting a field that's a huge industry. The food and beverage industry is huge. And then this year, for the year 2025, we also brought in the beauty and personal care industry. Now, we can't go back to 3 years like we can the food and beverage industry, but we can get the current year, and next year we'll be able to get 2, and the following year 3, and then it'll catch up to where the food and beverage industry is. We'll be able to go the current year plus 3 years back. But for this year, it's only 1 year. But still, again, when you talk to people, don't be surprised when they tell you, I've never heard of this. Because they probably never have. And their tax professional probably hasn't either.
Yep. So go down the page, Stephan, so we can see the examples. And Stan, won't you use the example what you've been saying? Because in California, California, because our wages are higher. It'll still be smaller, but it's still a significant amount of money. So Stan, go for it.
Well, we like to use the example that Jim Quinn talked about out in my area. He's in Connecticut. I'm in Massachusetts. But in that situation, what we had was somebody that had 25 employees. So we're going to type in 25. They were paying the $515. But the big thing in these high-end restaurants, Uncle Dan is going to cover this. He's on the call too. If you're going into a Chuck E. Cheese, they're not getting that much in tips. But this was a high-end restaurant, and we were like, wow. The number on their weekly tips was $1,300. Type in $1,300. Okay. And it makes no difference, Stephan, correct? The amount of hours that work.
So once you've hit $5.15 an hour, and I'm going to change it here just so you can see. Once you've hit $5.15 an hour, it doesn't make any difference how many hours they have work. The only reason we need this number is we need to know how much of this credit we have to give back. So they have to pay $213, and once they hit $5.15, we've got the whole amount of the credits. It doesn't literally make any difference how much I just changed it to 5 hours per week. Doesn't change the credit calculation at all because we've hit $5.15 per hour, and that's all we have to do. So now the factors become how many tipped employees. We're paying $5.15 an hour. Now the two numbers that apply here are just number of employees and the tips per week.
Yep. And I put that in my little script when we're talking to people, things as you're getting ready to do the actual calculator. So remember now, this is 1 year. Okay. So
1 year. That's why I put annual savings all over this.
Yep.
Because I want everybody to know this is a 1 year. You got 25 employees and they're making $1,300 a week. This is just 1 year for you. You can go 3 years back.
Yep. So what we do is we like to multiply that number and just, under the estimation that they did the same thing. So it's 129,285 times 4. It comes out to a pretty decent number. I believe we're going to be in the 500,000 range. I'm pretty sure we are. And then, so we're going to change that over, Stephan. You know the numbers here. This is Uncle Dan's favorite example. Uncle Dan, can you unmute? Or are you in an area where you're out, talking to people? You're always working just like me.
No, I'm here.
All right.
So enthusiastic.
Oh, yeah.
No, man, I was just dealing with something, but I'm good now.
He's probably tired. Hey, Uncle Dan,
Yes, sir.
How many days a week do I answer your phone calls?
All the time.
7 days a week. And what do I say?
The hotline.
No, I say, Uncle Dan helpline. What's your emergency?
Yes,
Uncle
you
Dan
do.
always has something going on, and I'm
Well,
always answering them.
that's right. And we got one after the call. I'm glad you said that. Thank you.
Because he's got lots going on, and he knows I'll answer. So, Uncle Dan, I'm going to ask you to walk us the number. Most of the people that are on here are through you. So walk us through what the numbers are and what we can be making here, because I kind of train and test Uncle Dan a little bit. He's really good now. Go ahead, Uncle Dan.
Well, I'm actually on my phone, so I'm looking at what you're showing me. So the total estimated back to the business is 517, but that's prior to us taking out the 30%.
That's the 4 years.
That's for
Down.
4 years. That's 155,142.
Yep. And then what's our 30%? See it right there in yellow.
Yes, the 30% there. That's what we're based our commission upon.
Yep.
Then we after what the other deductions that you have, what is that? The 3% and 8%? What is that?
That's the spread on the financing. If
they use it.
Shoes. Yeah, I've got that turned off for now.
Oh, that's fine. I'm on my phone. That's why I couldn't see it. That's why. Yeah. Okay.
So yeah.
But bottom line,
typically, if we get financing, they typically will finance 80 to 85%. And then if the client does choose that, once we have that in place, we'll be able to get a little bit of an override on that.
It would be great, because when you can do that and say, hey, we can get your money in 2 weeks versus, oh, well, I need to talk to my CPA, and that could be 6 months.
Right.
That just happened to me last night, but I want to tell that
we're working with a
story.
hedge fund right now to get the funding.
Okay. So anyway, scrolling down, the net recovery is 102,999.
Correct.
And the actual 75% of that number is the commission for Mr. Jim Quinn, which is 77,250. Is that a 9? I can't see.
$250.
$250. I think Stan is Jim Quinn's sponsor. So
yep.
Stan's override is $10,300. If I was Stan's sponsor, I would make $10,300. And if Dana, my partner, was my sponsor, she would make 5%, which would be $5,150. So I'll be look. There's nothing in the marketplace that pays anything near this, you guys. So you really, like we say, this is a land grab. There are other marketing companies coming real fast with this. They're not competitive when it comes to this. So even if you run across another rep that says, I'm doing it with this company, that's a great potential recruit for you. But in the meantime, I mean, let's do the math here. If you can get one like this a week, one a month. Let's be realistic. One a month. That's more than what you're probably making with all the other deals combined right now. Unless you're that superstar that's on here. So, but I mean, I personally, because I'm very serious about this, I'm out. We're going out to restaurants. By the way, went to a restaurant last night, my first day off of my liver cleanse, so I could eat whatever I want. I wanted some lasagna. Went to an Italian restaurant in my neighborhood, ordered it, asked the guy, hey, is the owner in? He said, oh, yeah, she's in the back. You want me to go get her? I'm like, sure, go get her. Look, I'm in sweats and t-shirt, and I'm not dressed for business. She comes out, and when I talked to her, super nice lady, I just I didn't just go into FICA tips. I said, hey, this is one of my favorite Italian restaurants. I've been coming here, You do great job, and your staff is so friendly, and And then she started opening up to me, and I said, oh, by the way, have you heard of the FICA tips tax? Tax credit. And she said, oh yeah, we already got that. We got that a couple of years ago, through our CPA. I said, really? I was like, oh, interesting. I said, are you sure you're not talking about ERC? She said, oh, yeah, I think, I'm not sure. I said, well, this is a credit specifically for your restaurant. Let me ask you this question. if you in the last couple of years got anywhere, between, I don't know, an extra 100 to $400,000, wouldn't you know it? She starts smiling. She said, I would definitely know it. And so I said, so I just continued with the conversation. I said, I don't know what the number is, but what is the best time for me to come back and give you an estimate on how much that you might be missing? And she said, can't do it Monday, can't do it Tuesday. Can you be here at 3 o'clock on Wednesday? My husband will be here. He's the one that we need to do this in front of him. And he has a relationship with the CPA. I said, fine.
Right.
So I have an appointment at 3 o'clock at the local restaurant where I just picked up some lasagna and a slice of pizza for my wife. And I don't know what the numbers are like. They do have quite a few employees, and I'm sure they do quite a bit in tips. But I mean, if they're looking at a couple $100,000, I think I'll get some free pizza for a while. So that's the end of my story.
And if they do say, well, I'm sure my CPA is taking care of this, then the next question is, are you sure? Because 80 to 90% of businesses are missing this credit. So are you sure they're taking care of it? Would you
No.
want to,
Yeah. And when I said that to her last night, I said, do you remember, after I said that, she said, I'm not sure. That's when I said, well, would you remember if you got an extra couple $100,000 in your account? She said, I would definitely remember that. And then she comes back and says, you know what? We bought out our partner a couple years ago and we found out that there was a lot of fraud going on, that he stole a lot of money from the business we didn't know about. And she says, we sure could use that money like right now. This would be a great help.
Yeah.
And I was like, that's when I went into, well, when can we meet? So, and the best time, everybody on here, is for restaurant owners is to around either early in the morning, but I would call first. But she said, I'm generally here before things get crazy, around between 3 and 3:30. So if you're going to walk into a restaurant, you guys that are on this, that's a really good time. If they're a hands-on restaurant owner, if they're not a hands-on restaurant owner, they might come in and do the books in the morning or something like that. But ask the general manager, when is the best time? When does the owner come in?
Yeah.
And then show up then.
I mean, even the general manager has an incentive because they're very in tune with how the business is doing, and the business could use an extra couple $100,000.
Correct.
Yeah. So even don't overlook the general manager because they're a great resource to the owner.
Yes. So Stephan, I was on the site a little earlier. I know this is more of an overview, but a couple guys that are on here, they wanted to know, okay, after we came up with the number and they're interested, what do we do next? Where do we go on the landing page? What do we have them do? And I was like, I'm not quite sure.
So the point of the whole part of the landing page is to get them to fill out that survey. Everything here is designed to get them answer all their questions, make sure they're comfortable with everything. Everything about this landing page is to get them to fill out this survey right here.
Can you show us the survey?
Yeah. Can you see it? It's the landing page. It's the right-hand side of the landing page. It's in white. You see it?
I see it. I see it. Yes.
Yeah. So that everything is designed so it answer their question, pique their interest.
Okay.
Let them let them get some numbers and feel good about the numbers, and then answer all their possible questions. That's why I've gone into great detail to make sure that they're very comfortable that they qualify. They've answered their questions. They've answered their frequently asked questions. Yep, I think I qualify and I could get some substantial money. What's my next step? Anytime they hit anything on this, get started. Every time they hit get started, it goes to this field right there in the survey.
How many questions is that? Is that like 5 questions or 6?
No, there's 5. We designed this so it would look smaller on there's more questions underneath this, but it's not more than about 10 questions. It's not very intrusive. So it starts with taxable income because we want to make sure that they had some taxable income on their tax return. How many businesses they operate. Some of this is for you guys. I want to discover some questions that are going to lead you to other verticals. So, multiple businesses, annual business revenue, how much you spend on payroll. It gives you a pretty good idea of what the size numbers are. Then we go next. And then we're going to ask more questions. At the end of this whole process, takes them to a thank you page where they can set up an appointment to get on my calendar for the feasibility study, where I'm asking them some very specific questions. Again, we're kind of going over, what's your taxable income on all these years? Taxable is important because this is a non-refundable credit. Let me touch on that a little bit. The way I explain this, if there was no tax liability on that return, meaning there's nothing in the system, there's nothing to go after that year. That doesn't mean it's gone. For example, we start with 22. 22 maybe for them was a bad year. They had, really good write-offs. They bought a bunch of equipment. They pretty much wiped out their taxable income, and they showed a loss on their, maybe this is the only thing they've got going. So they showed a loss on their personal return as well, which means in that year, they paid no tax. There's nothing to go after. That doesn't mean the credit's gone. It just means it carries forward into the next year. So with the next year, 23, we start with a carry forward, plus we bring a new credit in. There's even more to go after. In that year, if they have a tax liability, whatever that tax liability is, we can go after that tax liability and get all of it back. Whatever we can't use gets carried forward into the next year. And then again, the same process starts over. We got a carry forward and we got a new credit. If we wipe out all the tax, that's how much we can get back.
I'm just thinking because I think I see this more as an opportunity to do a follow-up Zoom once you give them the approximate number, because if they're busy, they're working, they're not going to have the answer to
the
taxable
call
income.
is set up to be a Zoom call. The feasibility study is designed to be a Zoom call.
Yeah, but what I'm saying, if I'm right there with them, most likely I doubt if they know their taxable income, they're going to say, well, I don't have my.
Even more so, if you can fill this out with them and then get them, and then at the end, go to the thank you page, get them on my calendar. And then if you want to add yourself on to that meeting, great, do it.
I suggested. And one quick question, I was on there earlier and it had all these different industries when we clicked the first question. It had like everything except the restaurants. It had a drop down with a ton of different when it asked what industry that you were in. I don't know how I got to that page because I don't see it on there.
That's a really good point. I probably need to refine that and narrow it down to just the ones that apply. But the reason I left that the way it is because that may lead to other things.
Yeah, it was too much though.
Yeah, you're probably right.
It was very confusing for us as
probably
us
need to
as
narrow
reps.
it down some because it just need to narrow it down to the ones that apply.
Yeah.
I mean, I did that more so, you might, you're probably right because on this particular survey, first of all, you're talking to probably either a restaurant or someone in the personal and beauty care industry. So to ask them all kinds of other questions that might lead you into R&D probably doesn't make a lot of sense.
Yeah. Thanks.
Okay, so this is my good lead in. See what Uncle Dan just said. What I always tell people that I imagined when I came up with the concept of Black Swan Business Advisors. I wanted it to be a company, okay, Andrew, I'm not going to say agent, of consultants, by consultants, and for consultants. Uncle Dan has a good point. We'll take action on it, and that's how it is with everything that we do here. That's why we're so different.
That's a nice thing about working with the firm that's doing all the work in the background is we have access to the landing page. We have access to change. Literally, I can go change that in the next half hour.
Yep. Try doing that with one of the fintechs that's going to try to jump on this.
Yep.
Okay. Do we want to take a few questions, Stephan? I know we have a couple of hands up. I don't know if they're old hands that went up, but yep. Anybody? I see Joe had his hand up. Dave?
Hi, guys. So I got a little resistance when I was talking to a client and asking me, why do I have to put taxable income in? And now I understand because you got to make sure that, they had taxable income. But as far as, I'd like to fill out the form. They are hesitant about telling me, what their taxable income was. That's kind of private information. can I just tell them, well, look, we'll just put 50 grand in there or something
Yeah,
like
just
that?
give me a ballpark idea, because it's not that critical. We're going to find out anyway. If they're interested in moving forward, we're going to get the real number anyway.
Yeah, I know, but they may not want to
You
give it to
know,
me.
if you don't want to, if you give me a ballpark idea of, it's a required field.
Yeah, well, I could just tell them, okay, put 25,000 or 50, something in there.
Yeah.
If they have a problem telling me what their income is, because I've
Right.
already run up against
Yeah,
this.
that's fair. And the reason we ask that question is we want to know, is there money to go after in this year or not?
And the other thing is I've already sent links out to clients, and they might have signed up already. I didn't use the link from the back office. I wasn't aware of it at that point. I did have it.
Yeah, yeah. Just tell us who we're looking for, so we make sure that we give you credit.
How can I do that? Do I send you an email or what?
Yeah, just send us an email.
Okay. The other thing too is, as far as that link goes and creating a hyperlink, I in the past, and this was on ERC, I ended up with a client. He doesn't trust links that don't have HTTPS in front of it, and he ended up clicking on some other guy's link, and
I mean,
went on
this definitely has. So if you go into your back office and you go to, so let me back out. So
yeah, it has it there, but if you go to make a hyperlink, or I ended up with I bought a domain name. I can't get the HTTPS in the domain name, and I don't think you can do it in a hyperlink.
Yeah, this right here is a hyperlink. If you copy this is a hyperlink.
Right, but if you want to kind of because that looks kind of weird, like to rename it. Stephan was showing us how to do that, but you can't put HTTPS in front of it, and some people are hesitant about clicking on that. If it just said, say, like,
well, let's do that. Okay, I'm gonna bring up my screen. Hang on one sec.
Stephan, I did that. I copied it in an email.
Yeah.
And it does, when you create the hyperlink, it puts everything into it. But when it comes up on your personal page, it just shows the home page of FICA. It doesn't show our information in it. It just shows, FICA tax, tips, credit. It doesn't show.
Right, it goes directly. It doesn't go, it's not linked to us. It's going to go directly to the main page that you have set up, and we're not going to be associated with it. That's the problem.
All right, so you guys can create a hyperlink to do anything. So understand that this is, can you guys see my screen?
Not really. Okay, I see it. Yeah.
All right, so you see my screen. I'll make it bigger, right? You see it now?
Yep.
Yep.
Yeah.
All right, I just on a Word document, I created a hyperlink. Right. I created HTTPS. I can make this John Smith. I can make a hyperlink anything. Okay, I just did.
Well, when I clicked on it, it didn't.
Okay, now I have to edit this because right now it thinks it's a hyperlink, but it's not. Okay, so now I have to do is I have to go in there and I have to edit this and tell it where to go to.
Right. So that's where we'd put our link in.
Yeah, that's where you put your link in. You would edit this and replace that link with your link. This is what they would see on the screen, but this is what the link is.
Right.
Yeah, Stephan, does it track it in the background? Because I know it doesn't show all the information behind it. It just will show
what's important is not so much what they see on the screen. What's important is where you're sending them to.
Okay.
This is your link with attribution to this particular campaign, 7-5. Okay.
Okay.
So this is tracking. This has got attribution to it. So if you copy this and I go and edit that Word file or that Word, if I go and change this and edit this, even though that's what they see on the screen, make edit link. Yeah, edit hyperlink. Now, if I go here, okay. Okay, sorry about it. Hang on a second.
That was backwards.
Yeah. Yeah, because of this is, I'm going to change this up here. Display as stands
We'll put the HTTPS at the front.
Yeah, you can put it wherever you want.
Well, I tried it, it didn't work.
Let me try it. Let's see. There you go. So that's not really going to go to Stan's FT.
I think you can close this out here now, if you'd like. And you know how I always like to wind up these meetings, everybody. Our job is to what? Make sure that you're not viewed as a what, Andrew? A what?
We are not a jag.
Right. And what is a jag?
A jag means just another guy or another gal.
Yep, that's correct. So everything we do, there's a reason we named ourselves Black Swan Business Advisors. We deal in the unusual, okay? Things that you're probably not going to have seen unless you're walking in the right cycles. And here you go, my phone's ringing. This is what happens to me all day long. I'm going to let you close this out because I got to take this call.
Okay, sir.
Very good, everybody.
All right, Stephan, give me a sharing real quick, a share. Anyway, so Andrew on here, and I'm one of the executive of Black Swan Consulting Group. So, like I said, today we introduced, a few like 4 saving or benefits verticals here. At the top of the hours, we was talking about saving money on your car insurance for everyone if it's qualified, through Good Driver Mutuality FinTech's app. That's incredible. And then we just learned that group health management strategy with Quantum, that you can save as business owners. You take advantage of this, save tons of money on FICA tax reduction. Okay. And then the ER3 plan, and on here is mainly reduce the business risk. And with that strategy, it has a unique side benefit along with it, like 100% tax deduction on that, and also you can super fund the Roth IRA and so on and so forth. So take advantage of that strategy. And last but not least is right now is the talk of the town is the FICA tip tax. If you are business owner that in this tip industry, you must know and take advantage of this FICA tip tax. Okay, so like I said, we help many individuals or business owners to increase their cash flow, reduce their expenses, and protect long-term wealth. All right, so we operate as a full-service financial solution center, so like a financial concierge, kind of, okay, guiding you to exactly what fits your personal or your business needs. Okay, so to be clear, okay, when you on our call today, or we are not selling you any product or anything like that, but we are here to mainly deliver measurable financial value that help you to save money, and optimize your financial structure. So thanks for being on our call. And if you are in Southern California, and also you are celebrate Lunar New Year, it's coming up. So I wish everybody a Happy New Year again. And if you're in Southern California, just welcome to our our show. Celebrate with us on the day after the Valentine Day. All right, in Southern California, in White Palace. So if you guys drop in Southern California, we have a great show event, that you can attend with food, dancing, and all that stuff. So again, enjoy, and thank you again for being on the call. All right, so the next meeting or next training is going to be on Wednesday at 11 o'clock is our ER3 plan, and then right after that is the FICA tip tax credit. All right, and then we have a 6 o'clock p.m. Pacific time. We are in the Western hemisphere here, Western Pacific time. So 6 o'clock we have a Vietnamese, a good driver team. So we'll talk about that car saving program in Vietnamese, and then 7 o'clock again is our platform. This is what you just hear from just the tip of the iceberg. We have many more service, and would again help you as business owner or individual. All right, guys, have a great weekend.
Don't forget to send me the call. People already want it.
Yes, sir. We'll send it out for you guys. And also, Stephan, I checked that out. Pickleball. I've seen it. The game is getting more and more exciting.
Oh, it's insane. It's
crazy.
insane.
I know.
I even I even played it while I was on the ship.
Yeah.
In the wind. That was interesting.
Yeah. So enjoy your pickleball, and I'm heading out to the club, table tennis club, to kind of get some exercise too. So, guys, enjoy your weekend. Bye for now.
Bye.